Welcome to this episode of moMONEY. I'm Alexander Palmaris, your host. Traders seeking an edge are always keeping an eye out for interesting insider trading activity in a particular stock. Taking this a step further, there are certain characteristics that can be identified to really kick things up a notch. As this information has become more widely available and easily accessible, many traders don't place nearly as much importance on the data as they should. That's not to say that all the many filings spewed out each day are useful or even meaningful, to say the least. But if you watch out for a few key factors to line up, you may find a catalyst with the potential to line up into a perfect storm that'll lead to rather impressive short-term stock returns. In the following 2 episodes, I'm going to discuss with you some of those catalysts, along with a few examples. Now, just because the release of an insider filing may lead to a temporary price jump, that doesn't mean the current price fully reflects the quality of the insider purchase or purchases. Also remember that insiders are not buying their stock hoping to sell it a few days later. They're placing their money on the line because they believe their stock's price is likely to appreciate significantly enough for them to risk allocating their personal capital. There's also other timing factors that may take effect. For example, what if an insider purchased stock a few days before the market dropped several hundred points, as it did back at the end of February? Does that invalidate the purchase? Highly doubtful. What it may do, however, is offer traders and investors an opportunity to purchase the stock at prices even lower than the insider himself managed to acquire. L3 Communications makes a good example of this when multiple directors all purchased several $1 million worth of the stock near all-time highs in the mid-$80 per share. Wow. Stocks with insider trades near all-time highs certainly make a strong statement of confidence by those at the company who are in the know. It takes some serious cojones to put money on the line at such elevated price levels. It'll also give you a big clue as to whether the stock will continue breaking out to even more new highs or if it'll fake out traders and begin a new downward trend. If these insider buys are combined with already high levels of short interest that may take many days to cover, it can lead to an even greater potential move. As the stock continues to make new highs, shorts remain in denial as to how high the stock can go until their wallets just can't take it any longer. SONE Corporation is a good example of this, with a short interest of over 7%. On May 11th, Director Edward Torino bought 7,500 shares of SONE at $7.39, near 12-month highs. The trade was reported on May 14th, and prices remained in the mid-750s for several more days before finally thrusting above $8 per share. I didn't want to overwhelm you too much in this episode, so be sure to tune in to part 2 of this series for even more insider trading tips. You can also begin scanning for your own potential insider trades using the free insider trading feeds we offer at eureka.com/feeds. They're completely free and include all the information we described here today.